inflation is going to be a thorn in their side, which means they'll have to continue to hike, then it means risk assets will ultimately get decimated. Cryptocurrencies, in my opinion, are that perfect example of like a .com era type scenario where we have to see a lot of these things wiped out. So today we heard that they did raise interest rates by 50 basis points. And I think the key was going into today, the market was really, really nervous. We saw Bitcoin being a little jittery right at the low end of a channel that it was in, kind of touching it, deciding whether it wanted to break down. And the same thing with the stock market. We've seen a lot of selling pressure recently. And the market was kind of thinking that, and going into the kind of announcement that it was going to be a 10 out of 10 in terms of hawkish. So again, think about 1 to 10 in terms of hawkishness. The market was like crazy hawkishness, 10 out of 10. And then they came out and they were like an 8 out of 10. And the market was like, like breathing that sigh of relief. And then off to the races, everything went. Risk assets, stocks, commodities, we saw surge, gold and silver. And of course, cryptocurrency. I mean, Bitcoin had a monster move from basically a low today of around 37,500 all the way now trading just below 40,000. So I think it's basically a short-term reprieve. I think the markets were just overly tense and nervous about this statement. Now we're through it for a month. I think we have another meeting in a month from now where they'll probably raise another 50 basis points. But at least for now, the market is rejoicing that it wasn't the worst case scenario. I mean, at least in the short term, it doesn't seem like the markets were pricing in the slightly less hawkish nature of it. And that's why we got such a big relief rally. Like I said, I don't think I'm looking at the market and I see just bearish pattern after bearish pattern. I see the potential of what rate hikes do to an economy, which is slow it. So again, for me, I look at it and say, okay, this is just the chop and the crazy moves of a bearish market environment. But ultimately, I think you maybe get a few days to a week of a rally, and then we probably start heading back down as smart money starts to say, okay, this is our chance to take profits again. Let's unload, and then it'll drive the market lower.
So the last time we spoke, you were forecasting a Bitcoin price maybe in the 20,000s.
Yeah.
Given that Bitcoin is in a bear market. Has anything changed?
Right now, no, nothing's changed. And so basically, here's your chart of Bitcoin. And you could see today you're having this beautiful bounce off this lower end of this trend line right here. But the bottom line is that the bigger macro pattern remains bearish. And what I mean by that is that if you look at this down move from the $69,000 high to here, notice that everything's staying within this range. And I think the last time we talked, we were in this range as well. But basically, this pattern is known as a bear flag, or an in spirit of bear flag. And if you look at 100 of these patterns, you're going to see that 80% of them break to the downside. So as long as probabilities are still telling me that, I have no other alternative than to be kind of still bearish on it. I still think that if the Fed is going to follow through on the hiking that they're saying they're going to do, and if inflation is going to be a thorn in their side, which means they'll have to continue to hike, then it means risk assets will ultimately get decimated. Cryptocurrencies, in my opinion, are that perfect example of like a .com era type scenario where we have to see a lot of these things wiped out. Not Bitcoin, though. Bitcoin won't get wiped out. In fact, it'll rise and be much, much higher in 5 or 10 years from now. But I think in the near term, you have to see that asset flush out. You have to see the .com flush out and debacle like we saw in kind of around the 2000, 2001 area, which mimics again. I mean, we were coming out of this crazy big market move with these crazy moves in the .coms back then. And then what did the Fed do? They started to tighten a little bit because they were getting nervous about inflation. And again, we saw that risk asset collapse. And so I think that has to happen with Bitcoin. So the one thing as a technician is that it's basically in the range until it's not, right? So we don't necessarily know. I mean, maybe it comes up to this midpoint here, which is around 44,000. Maybe it even has an amazing run to 50,000. But the key is, all we know is that when it breaks, that's where your next big move to the downside goes. And I think minimally we're going to like the 29,000. My projections put us at least down to 20,000, maybe even lower over the next 6 to 12 months. And let me just talk a little bit about my time frame. We know that Bitcoin was around in 2000. It started in 2009, and it topped out in 2013, then in 2017, and now in 2021. So it's a 4-year cycle. And if you look in between those cycles from the high to when it bottomed, it was about 12 to 18 months. So the idea is that if this was your high, and let's say 18 months out, we've bottomed out, well, we're about 6 months or a little bit more than 6 months in. So it leaves us about 6 to 12 more months before you really have a major bottom in Bitcoin. I think we'll actually break down probably in the next month. I'd be very surprised if we hold up within the next month, but I expect a real bottom to be put in, meaning whether it goes to 20,000 or 18 or 15 or wherever it ultimately bottoms out, I think that'll happen over the next 6 to 12 months, which then would put that in the same time frame as previous cycles bottoming out. And then I do think, again, whether it goes to 20 or 15 or 10 or whoever knows, I do think 5 years from now it's at 500,000. I think there's so much upside, as it continues to see adoption. And even in this bear market, we have to take note that there is lots of positive news for cryptocurrencies and Bitcoin. I mean, there's more adoption, more big money starting to kind of be persuaded that there's a future to it. We see more countries kind of adopting it as a form of kind of a reserve currency. So there's lots of positives out there that are forming. It's just that in a bear market, there's too much fear for that to have a positive impact, but eventually it will build and have a positive impact. Last year, we saw such crazy moves on the alts that it's hard to imagine that they'd have another big move, especially with the Federal Reserve tightening. And I think this is the biggest thing that investors need to just understand, is that you basically had an environment where the Fed had interest rates at zero and were printing trillions and trillions of dollars. So Bitcoin and all the altcoins could just do amazingly well. It was like free money just flooding into the market. Well, now they've kind of done the inverse of that, where you're starting to see a tightening of monetary policy. So it's very hard for risk assets to get a big move to the upside in this range. For me, it's playing these bounces in the market. Right now, I have a bunch of longs, stocks like Zoom and stuff that have just been absolutely, crushed from their highs, where they've made this low pivot here. If you guys can see this, we had this big run, and now notice how it's taking so long and it hasn't even taken out that low. So you basically have a trade here on the long side on something like a Zoom, where as long as it doesn't violate and confirm below this low, you just play the chart here for a bounce back up. So again, there's a lot of good opportunities in the near term, but when you look at the NASDAQ and you see this type of chart, I mean, this is not a healthy chart where you have this kind of mountain peak here with little smaller peaks here. It's a very, very bearish, bigger macro pattern. And what I love to show investors is that if you look at the S&P 500, if you look at the Fed, so going back to 2009, the Fed started to basically print money, and it was called QE back then it was a QE2, then it was 2.5, and basically all the way through COVID. And you could see how the market was in this very solid uptrend for a long period of time. Here was your COVID March of 2020 freak out. And off of that, there was more printing of money done in the next 6 to 12 months than we have ever seen, even in multiple years of QE. And that basically put the market on this steroid move. It was just nuts. It was like injecting tons of steroids into the market where we ripped higher. Well, now you're seeing that unwind because the Federal Reserve is now taking that away. So in my thesis is this year, we're going to get back in this range as the Fed fully unwinds that. And we know they're reducing their balance sheet now by 95 billion. They've taken away the quantitative easing totally, and they're raising interest rates to combat inflation. When the Fed was printing and doing everything they were doing, it pushed the market up because it was more liquidity in the system. Now they're doing the reverse. So it makes sense that in the very least, we should come down into this longer term trend on the S&P. The only long-term positions I currently have are in the physical metals. So I have physical gold, physical silver, because I view those as like an insurance policy. And people always call me crazy, but if like I woke up one day and like the grid was down and I couldn't get any money out of the bank and the ATMs didn't work and you had a scenario where your credit cards don't work, well, at least I have gold, right? I mean, I can protect my family, do whatever I got to do, and like chip off a little gold to buy some bread. But aside from that, when I have my macro view that we're probably entering another period over the next couple of years of like 2008 and 2000 and early 2009, where we're going to see 50, 60% downside and maybe even worse bordering on like 1929, 1930s, it's very hard for me to say, okay, well, even if I hold long term, this will be okay. Now, you might be right on that, where, maybe buying Apple here if you hold 10 years, but it's hard for my brain when I think to myself, well, I think Apple's going to $95, but let me buy it at 150. It's like, well, why wouldn't I just wait to 95, or at least wait till closer to 95? So for me, it's much easier for me to be a swing trader, where I get in, get out with like 5, 10, 15%, and then I just do a rinse and repeat on that. And I've been able to make much, much more money by doing that in this environment. So at some point, yes, like just like with Bitcoin, like I'm a shorter term trader on Bitcoin. But when Bitcoin gets down to where I think it's going to be like a major cycle low, that's where I'll start doing what I do with gold, which is putting aside a good chunk in Bitcoin and just leaving it there, because I think the upside is massive. So there's always opportunities as an investor. And even if you don't want to be in stocks because you're fearful of, let's say, another 10 or 20% downside, you can always look for other opportunities. Like, for instance, gold and silver look really cheap to me. Eventually Bitcoin. I mean, there's always an investment, and especially knowing it's better than not knowing, because you can prep for it. And again, by no means do you need to be totally out of stocks, but like some of the stocks that I like right now are like, high dividend paying inflation hedges, right? Where they're paying already a 5% dividend. They're kind of known for seeing money flow going into them. Like let's say an IBM, which is actually showing great earnings recently, pays a great dividend. It's a low PE stock. Those you can kind of hide out in, at least in the near term, and make some decent money on. And I continue to really like gold. And I know, in the Bitcoin world, it's kind of sacrilege, but like I'm a big believer that there's room for both of those assets. One's a physical asset, one's a virtual asset, if you will. And I think there's a beautiful kind of synergy that they both can take. And over the long term, I do think Bitcoin will take more and more market share from gold. But just in this risk-off environment, right now, it's too much of an adolescent. So like I always like to tell people that, Bitcoin was created in 2009. So it's only a 13-year-old. And for those of us that have kids, I mean, think about the irrationality of a teenager, or just a new teenager. So it's going to act erratically. If you're trying to protect yourself from inflation right now, it's probably not the best hedge. But in 20 years, when it's mature, yes, I do think, or even in 10 years from now, when it's mature, it's just, you have to understand it's a new asset. People are still trying to figure it out. So it creates this wild swing.